Hello everybody and welcome to this new video where I analyze BitDigital. BitDigital was a stock request. It was requested by a Patreon member who will recognize themselves, and I thank this Patreon member for sponsoring this video. So the main thought that I have about BitDigital, it's a Bitcoin miner. They do high performance computing, Bitcoin mining, as well as Ethereum staking. And so different is the word that comes to mind when I think about BTBT. So let's go through some of the parts analysis. We're going to look at the assets, and then at the end of the video, we're going to look at how much money they make. So let's begin with a quick valuation of the assets. They hodl some Bitcoin, which I like very much. They hodl 742 Bitcoin. That's $71 million. That's great. That should give some leverage to this company as Bitcoin rises. Now, they also own a bunch of Ethereum, 27,388 ETHs. And so this is all a debate as to whether you believe in ETH or not. And ETH, of course, has competition from other layer 1 blockchains like Solana. ETH also has competition from its own layer 2 blockchains like Base. It seems like a lot of money that ETH was making is now being made by Base, which is owned by Coinbase. But anyways, let's assume one believes in Ethereum and likes the asset very much. That's 68.5 million. You can see they're diversified across Bitcoin and Ethereum. Now, unfortunately, they have a lot of cash for my taste. I don't like when companies have a lot of cash. They have 105 million in cash. That's my sad face right here. I do not like that. Anyways, if I add the Bitcoin, the Ethereum, the dollars, I have 245 million accounted for with a market cap of 456 million. So right now, just the easily sellable stuff, the Bitcoin, the ETH, and the dollar, which you don't need to sell, if you subtract that, you get the value accounted for the market cap of 53%. 50% of the market cap can be explained by what they have on the balance sheet alone, but they have more assets, as I'll get to the end of this video talking more about this. Anyways, the stock is also trading at a relative discount compared to a while back, and I think the stock dropped largely because of AI hardware fears related to DeepSeek. This is probably one of these stocks that are sold off along with a lot of AI stocks because this stock, like I said, has been getting into HPC, high-performance computing, and so the market has identified it more and more with high-performance computing, with GPUs and all that sort of stuff, and therefore it got sold off. So it's a relative discount. This stock was trading at $5.50. It even crossed the 5 mark, and now it's back at $3. So that's a discount relative to this period. Now, this is a complicated stock to analyze, to say the least, and they have three main business activities. So I'm going to go through each of them. One of them is the AI high-performance computing data center. They bought a data center. That's going to be their tier, their first tier, the first third. The second third is going to be the GPU cloud, which is what they call BitDigital AI, and I'll get to talk about that. And the last one is the mining and the staking, which they put together. So you can see they are slowly trying to not identify as a Bitcoin miner anymore, which will help explain some of the weird things that's going on with them selling the Bitcoin in order to buy ETH and stake ETH. So I'll get to that towards the end of the video. Let me get started with the purchase of the data center. So they purchased the data center in Montreal. Now, this data center has all of the bells and whistles that you need to sell to big tech, that you need to sell to startups that need high redundancy, that need the data center to be on all the time. This is an expensive data center. This is not your typical build out like you would have in West Texas in the desert or something like that. This is a high class data center, high level data center, and that's where they hope to operate their GPUs, their H200, H100, the colocation, big part of their business. They also bought some customers with that. And that was a $46 million purchase for them. And of course, they want to expand the size of the data center. They want to expand the capacity, the megawatts. So they hope that this acquisition of a data center will enable a lot of growth for them. They are also, and so you see, you have GPU as a service versus AI HPC, right? So they're trying to move away from the GPU cloud, GPU as a service business into the AI and HPC business. And why is that? Well, it's because it's a more profitable business. You can see AI HPC has, let's call it 75% gross margin compared to 70% gross margin to GPU as a service. So that's higher gross margin. The contract terms that you sign are much longer, up to 12 years. And you sell to bigger enterprises that can pay more compared to startups, for example, and the capex is lower. It's only 8 million per megawatt versus 26 to 30 million for GPU as a service. The financing condition, they also note, could be easier for them, and that's a business that they like better, which is why they bought Innovum, the business. And in this business that they bought, you can see that they have expansion. So, and by the business, I mean the data center. They have plans to expand the data center with multiple businesses that could partake in the business. And of course, one of the big advantages of that is that they're going to be able to move some of their AI GPUs customers, which is their business number 2. They're going to be able to move some of that into the Innovum sites, creating cost synergies and efficiencies, eliminating what they pay to third-party hosting. So they have some of the synergies for this acquisition. So a lot of the business right now rides on this acquisition of a data center and them trying to be a data center company. I also want to talk about why they want to become this data center company. Why are they investing so much in the data center business? Well, they are doing that because they want to be valued higher. They want to be valued pretty much like a tier 3 or at least like a hybrid miner. And so on this channel, I have covered Iron in the past, and I've identified that Iron to me suffers from low valuation because they don't have a clear picture of what they are to the market. They don't communicate to the market exactly what they are. Well, Bit Digital seems to be suffering from a valuation discount even worse than hybrid miners, even worse than your typical pure play digital asset miners, and worse than the tier 3 data center, which if I were looking at the business, I would place them anywhere between hybrid miners and tier 3 data centers. So they hope to be trading at a multiple between, say, 15 and 23 EBITDA. Maybe 18 and 19 is what they hope to be trading at. Now, they're desperately trading at not even half of what a pure play miner is trading at. And pure play miners, of course, right now are extremely cheap. Now, it all depends on your valuation, but this stock is cheap. This is the general understanding that I have based on my sum of parts analysis, is that this stock is very cheap. Let me talk about the second business. So as we know, they're moving towards trying to be a data center, trying to do AI HPC data center business. That's what they're trying to do. But they still have their GPU cloud business, where they seem to have been quite successful at renting out GPU capacity. They have an anchor customers. They have multiple customers. They hope to get 92 million from a single customer until 2026. This is a big deal. This is impressive. There's companies I follow in the GPU business that just don't have customers. They've built out the business, but they haven't had a customer because one of them quit or a company got acquired, etc. So this is impressive that this company has one of a customer, and I don't know which customer that is. I'm assuming it's the same, but I don't know if it's a different customer, if it's the same customer. But this is an example of the GPU business. So, for example, this is called Boosteroid or Boosteroid. So this is the third GPU rental business. So what is this business that we're renting the GPUs? Who would want to rent GPUs from a high-class data center? Well, gaming. So some gamers, they don't want to buy the GPUs. They're not interested in spending $1,000 in buying their own GPUs. They would rather pay a subscription of, $10 a month, €7.50 a month, and they pay a subscription for cloud gaming, and they can access the GPUs in the cloud, and those GPUs that are accessed in the cloud are rented to companies like Bit Digital. I find it very impressive that they are acquiring this type of customers for their GPU use. It makes a lot of sense to me why a company like this could be a reliable long-term customer for the renting of the GPU business and of a GPU section. The last part of the business is the weird/different part of the business, and it's the Bitcoin mining and the Ethereum staking. So I call it weird because, typically a business is either anti-Bitcoin or pro-Bitcoin. You're typically a Bitcoin maxi or you're not, and they're not stuck in the middle, but they kind of got a hand in everything. And so I'm seeing a lack of conviction. It's a strange flywheel. I'm not saying it's 100% bad. I'm just saying it's very different. And so I can only imagine how confused the market. So they don't want to hodl too much, but they still hodl a little bit, okay? And then the other part of their hodl, which they don't hodl, they sell to get ETH, and then they earn staking rewards from ETH, and those staking rewards from ETH, they cycle it back into Bitcoin mining hardware. So they mine Bitcoin, they sell a part of the Bitcoin to buy ETH, they stake the ETH, they collect the rewards from the ETH, and they put it back into BTC mining hardware, right? Most companies who sell their Bitcoin do it to grow the Bitcoin mining. They don't go through that additional step of Ethereum staking. So why wouldn't you just sell the BTC to invest in more mining hardware directly? Isn't that more efficient than just switching to ETH? So I find it strange. I don't really understand it. I'm guessing they must have some people who are very bullish on Ethereum in the management team. This is the only way I can explain it. Nonetheless, it's interesting. So if someone wants ETH exposure, ETH staking exposure in a traditional brokerage account, to me, this is one of the only stocks where you can get it, in addition to maybe Coinbase, where you get a lot of exposure through Base. But if you want to get ETH exposure, that seems like a good deal to me. But otherwise, I think it's very confusing. The market is going to be confused on that one. So let me conclude this video and start a conclusion. So this stock reminds me a lot of Iron, so Iris Energy. Mr. Market is confused. It's a Bitcoin miner that is unsure about Bitcoin, but also unsure about Ethereum, because it gets the staked money and puts it back into Bitcoin. So it's like kind of two feet into different baskets, right? And they seem to be less sure about Bitcoin and less sure about Ethereum than they are about the AI, HPC, and GPU business. So it's as though they want to leave the Bitcoin mining business, the Ethereum business, and they want to move into AI, HPC. So that's why the Mr. Market is confused. And that's why, in my view, it suffers from a super low valuation like Iron, perhaps even more than Iron, not perhaps, for sure even more than Iron, because the market doesn't understand it. And this is true, by the way, of some of the part stocks, some of the parts businesses. Try to look at Amazon, Google, Alibaba, and look at their different parts and try to value them separately and add them together. Separately, they're worth much more than together. So when businesses don't have a clear focus, they tend to suffer from an undervaluation. And of course, this could be an opportunity for long-term holders if you're willing to hold for a long time for value to be realized, and it's a value play. And so if you're into value plays, you may find that interesting. Now, I will warn my viewers, of course, that a value stock can remain in deep value territory for a very long time. That being said, let me recap how how cheap it is. And this is where I'm going to do the sum of the parts. So, like I said, the Bitcoin, that's 71 million. The Ethereum, that's 27,000. The dollars, that's 105, right? The mining equipment. So their mining equipment is actually not that bad. It's actually pretty efficient at 28 joules per terahash. So according to Grok, I didn't go and calculate it myself, but according to Grok, the Bitcoin mining equipment right now is valued at 97 million. The data center, now I'm being very unfair here. I'm just saying it's worth what they paid for it. 46 million is what I'm saying. And I'm not taking into account the many aspects of like power access and getting access to power, right? And BTBT also owns $65 million worth of H200 GPUs. Now I think I'm right on the money on this because they acquired a few H100s that I didn't include. This could be more, but again, I'm using Grok to establish how many GPUs they own, and I'm getting to 65 million. Now, you could argue with me, say it's worth a little more, it's worth a little less. You may think I'm a little too optimistic or less optimistic about anything. Anyways, it doesn't matter because I'm done with my value accounted for, and I'm able to account for 453 million worth of sellable stuff, when the market cap is 456 million. So without barely looking at, well, I guess it's almost negative, right? It's not exactly negative, but it's almost negative. It's 3.3 million. So it's slightly positive. The business is essentially trading for the sum of the parts, and there's no debt, by the way, and it's essentially trading for the sum of its parts. And so it's crazy. It's crazy, right? There's no interesting value in this business. And lastly, let me conclude. Well, how much money do they make? Well, it's a very messy income statement, but here is how I calculate it. So, of course, these companies are in growth mode, so it's very tough to just look at EBITDA and value them based on EBITDA. I value this company based on gross profit. So, looking at Q3, in Q3 they had 22 million of revenue, 7.7 million of gross profit. So the gross margin was 34%. And in end of 2024, they guided that it would achieve 100 million. So I'm going to assume that in 2025 they're going to do 100 million. 100 million, 34% gross profit. That's 34 million. So let's go and recap. This is a company right now whose market cap is trading at 4.5 times sales, or 13 times gross profit. Like I said, I don't think the rest is optimized. So, any way you put it, this is a cheap stock. Some of the parts is the way that I get to tell you it's the cheapest. But if you look at compared to the sales and compared to the gross profit, it's also looking cheap. So, key question now as to whether someone is interested in this stock or not. And I have more than enough exposure to Bitcoin miners. I'm not looking to add another Bitcoin miner because there's so many out there and they all look pretty darn cheap in my opinion. But one key question on this one is, how bullish are you on ETH, right? So on Bitcoin, of course, if you're watching a video about a Bitcoin mining stock, I expect most people to be bullish on Bitcoin. But on ETH, right, typically, this is not a combo of people who get along, historically, right? So you need to find a shareholder who's bullish on both ETH and Bitcoin and likes the diversification. So that's the key question on number one. And then key question number two, which is the big question mark in all of the public markets here, is how bullish are you on data center values? Do you think data center is going up? Do you think they did a good purchase in Montreal or not? And so if the answer to that is yes and yes, then it may be a good business to invest in. The risk, though, what I'll note, and I'll conclude with that, is the depreciation of the GPUs and the Bitcoin miners. Now, of course, Bitcoin miners, frankly, Bitcoin miners last much longer than GPUs. When I look at the depreciation of GPUs, these GPUs become obsolete much quicker than Bitcoin miners. And so, and GPUs, they just become obsolete, right? Over the short to medium term, Bitcoin miners may actually go up in value because Bitcoin miners, although over a long run, their value trends towards zero, between 5 and 7 years, a Bitcoin miner will become worthless after 5 to 7 years. Over a 3 to 6 month period, you still have your Bitcoin miners who could go up in value because of the price of Bitcoin going up faster than the difficulty is going up. So if price of Bitcoin goes up faster than the difficulty, you could end up with your Bitcoin miners being worth more money. So over the short term, Bitcoin miners are positively correlated to the price of Bitcoin. Over the long term, the difficulty is making them worthless. GPUs, on the other hand, in my view, they are mostly depreciating assets very, very, very fast. They depreciate as fast as Nvidia is able to launch new products. And so how confident are you in the GPUs? How bullish are you that they will be able to depreciate? This is a key question of this investment, of this video, and frankly, everybody in AI is asking that question right now. Microsoft, Amazon, 80 billion there, 100 billion there, all of the money they're investing in those GPUs, they ask themselves that question, which is how quickly are they going to depreciate? How quickly am I going to need to replace them? And in my view, they do seem to depreciate much faster than Bitcoin miners. So these are the keys to really understand this investment. I hope you learned a lot of stuff about Bit Digital. I definitely did. This stock is very cheap. That is my final conclusion. It is a very cheap stock. As always, this is not investment advice. This is not financial advice. This is just entertainment. This is a stock not recommended, but requested by my Patreon viewers. So as always, no financial advice. Please please subscribe. Thank you so much for watching and have a wonderful, wonderful day.